Recording.
Warm welcome to all of you. This is A.K. Asthani from Smart VRC Bhopal, and this is our webinar number 114. This was started about 14 months back, and with your support and with your suggestions and feedback, we are here. This webinar is hosted every Saturday or Sunday. All the contents in this website are produced in-house and hence copyright. All the data collected from you will not be shared with anybody, with any third party or anybody else. Your audio is in mute mode, and be careful before enabling your video. As you know, we all are watching, we all can watch anybody else. So the topic is fear or not to fear. A very, very interesting topic, and especially when the markets are at historic high. It has already closed above 56,000. Sensex has closed above 56,000 for the first time. And mid and small cap are showing a little bit of nervousness, as can be seen from their movements. So we are starting with a poll, and the question is, which characteristic plays a stronger role in creating wealth? Which characteristic plays a stronger role in creating wealth? So number one is fear, number two is no fear, or number three is calculated fear. So let me launch the poll. I hope you are able to see on your screen. So 49% of the participants have participated in this poll. I desire that 100% of the participants should participate, and nothing to be feared. It's only a poll. So the more the participants, more better the picture will emerge, and more better feedback we all will get that what the retail investors think. Thank you, participants. 84% of the investors have participated, and the results are there on your screen. I have ended, and you must be able to see the results on your screen. 14% say that it is the fear, and 18% say that no fear, and 68% are in favor of calculated fear. So thank you very much for your devoting time. Let's move ahead and we will see what is our opinion. Okay, once again, one more poll. I believe there are only two polls, so this is the second and the last one. Fear is stronger than greed. Do you agree? So you have to answer whether it is yes or no or can't say. I hope you are able to see the poll on your screen. Fear is stronger than greed. So the emotion of fear is stronger than greed. So 10 more seconds left. 78% of the participation, and that goes to 84%. And soon I'm going to close this poll, end this poll. Okay, 84% participation. That is pretty good. And this is the result. 72% say yes, fear is stronger than greed, and 34% say no. And there are 4% investors who say they can't say. Okay, that depends from individual to individual. But what the market says, let's see what the market says. So here is the Sensex chart. And as you can see, it is from pretty long duration and about 35 years. And you can see the ups and downs. And one thing is very, very predominant, and that is the falls are more sharper than the rises. Rises are always market gains steadily and falls sharply. This happens most of the time, and that shows that the fear is indeed a stronger emotion than greed. So what we are going to do in this webinar is we are going to share 7 reasons to fear and 7 reasons not to fear, and then to be followed by most sought after questions and answers. I'm always ready to answer your queries. So first, the 7 reasons to fear. So for that, I have made the full form as face everything and recover. Yes, fear has to be there to a certain extent, or rather I can say a calculated fear, because market is risky in a sense. How you pick the stocks, how you provide the weightage to your portfolio, and how you act. So in that sense, yes, you need to fear, but also there are facts that we need not fear, and we are unnecessarily creating a fear in ourselves as well as in the market. So first is the fear of losing capital. This is very much required, and you must fear of losing capital, and that is why you must select the stocks very carefully, right? Losing profits, fear of losing profits. Yes, fear of capital is very natural. It is your hard-earned money, and you cannot afford to lose money like anything. And fear of losing profit should also be as strong as the fear of losing your principal, your capital. Often it is observed that people are less fearful of losing the profits. No, you should give the same weightage to the fear of losing profits as to the fear of losing capital. You should be as fearful as for profits as for capital. I will give you one very good example, and that shows how we are extra fearful. So this is the real case. Just last month on 15th of July, we recommended a stock. Share price was rupees 285, and then within a couple of days, it went up to 360, and then last closing price was 285 on 27th of August, that is yesterday. What I got the feedback from one of my subscribers is, "Bahut gir gaya share." Then I asked him at what price he has purchased. He said that at rupees 285 only, but it went up to 360 and he lost. He said that the share price has lost substantially, about 20%. And what should he do? Now, there are 2 ways of looking at this problem. One is you purchased at 285, so nothing to be worried. It is at 285 only. But the thing is, when you purchased, it went up and then it came down. So that is the problem. That is psychological. Now, one should understand that what is the holding period? What is the target return? Our holding period is pretty long, about a little less than 4 years. And the target date is 15th of April 2025, and target price is 630 rupees. So nothing to be feared. It is a part of the stock market. Your stock will go up and down. It will move up and down. Various phases will come. Various events will come in the short term, but it is the long term which counts ultimately. If you are a long-term investor, so that is the way of looking at losing the profits. Now, losing potential gains. This is also fear. What does it mean? It means if the stock is moving up, suppose I give you an example. Suppose that you purchased at rupees 100 and it is moving steadily up, and at rupees 150 within 3 months, I asked you to sell. Now what happens? There are many investors who think that since the stock is already in up move, why should I sell? Why should I lose the potential gains? And they keep on holding. One such real example I'm going to share with you, and it is very, very interesting. Now, this is the Smart Gains, one of our products, dated 17th of March 2006, wherein under the hidden gems, we recommended Walchand Nagar Industries. And at that time, the price was 715 rupees. Now, what happened after that? This was on March 06. We recommended at rupees 715. Now, this is where, as you can see, the cross mark we have recommended here to March 2006, 715 rupees. Now, this is not 1:1 because post this price, there was a stock split as well as bonus in 1:1 ratio, and bonus was in 1:1 ratio, and stock split was from rupees 10 to rupees 2. So there is basically, you have to divide by 10. So when I say 715, that means 71 rupees. We commented at 71 rupees, and our target was very nominal at 1600 rupees. That means 160 rupees. So stock went up around here. We asked to sell, and this subscriber, she was a lady from Kolkata, and she said that she has not sold, and she informed this when the share price started moving up. And you say, as you can see, there was a steep upside. So basically, stock was under upper circuit for many days. If I'm not wrong, I think for about 20 days it was in upper circuit. So for only few days it came out of the upper circuit, and again it got latched into the upper circuit. Now this lady, I kept on telling her that you sell at least 50%, at least 50% quantity you must sell. Now she had subscribed to one more service from an advisor from Pune, and she says that this advisor is telling that the share price will move up to 10,000 rupees. And she was right. That stock went up to 10,000 rupees. As I said, you have to divide by 10 because of the stock split and bonus. So it went up, it crossed even 10,000 also. And many a times I asked her to sell at least 25%, but she was calculating her gains on day-to-day basis. And then came the downfall. And as fast the stock moved and as sharp was the downfall, nevertheless, management declared 1:1 bonus as well as stock split in 2008. Yes, maybe after around 2 years, it took a long time. And but the stock continued its fall. There was a small spike, but that lady was very adamant. No, now I will sell around plus 10,000 rupees only, because she has seen this stock. That is a psychological barrier. Once you see a price higher than your current price, then you are not willing to sell. You get attached to that price. You want to sell at market peak. What you are not looking is you have purchased at this price and you are sitting here. And stock continued to fall. She could not sell, and she continued to get an advice from Pune that yes, stock will go back to those levels, but it never went back. And ultimately, she sold for a gain of only 28%. So this is the story. And this is how, because of the fear of losing the potential gains, you are not selling. So it cannot happen that you can sell at market peak. It cannot happen that you can project up to what price this stock will go up. And even if you know that this is the peak, but the stock is in lower circuit, then also you cannot make an exit. So be very, very careful. Don't be so much of greedy. Don't fear of losing so much of gains. You should be happy when the stock has crossed the real worth by about 10% or 20% at the most. So coming to the fourth point, fear of holding cash. Yes, there's a real fear. Now there can be two parts. One is that you are not able to find an appropriate stock. So there is no compulsion that you have to invest. Rather, keep that money in your bank until you find a good stock. That is one way. Another way of holding cash is you are expecting market to fall. That can be very, very dangerous. Let's see why. So these red points, you can see these are the almost the bottoms of the subsequent movements. You will find that these were the bottoms. And if you are holding cash at these points, because the market is continuously falling, so you might think that market will go further down, and so you keep on holding the cash. And once market takes the U-turn, then again you are getting lashed to the low price and you are not buying it. And now you are saying that once let it come down to this point again and I will buy. But in most of the cases, that never happens. As you can see from this low, you can see from this low, these are the lows, even for the last year on 23rd March. So that can be, opportunity cost can be very, very high. Now just try to appreciate that a person who was holding cash at this point, he never got the Sensex level at this point for the next 15 years, more than 15 years. It is about 18 years. And there is no possibility now. So that is the opportunity cost you have to pay. Decline in portfolio value. Fear of decline in portfolio value. Why? There are investors who are not assigning the proper weightage, the proper allocation to the stocks in their portfolio. There are investors who are holding 50%, even 60% weightage in a single stock in their portfolio. I've seen many portfolios under our Dr. Smart scheme. We get not many portfolios to analyze, and I find that in more than 70% of the cases, the weightages are not proper. So that can be one of the reasons that you are fearing. Suppose I give you an example. Last year, it is just an example, not a real case. Last year in February, if you are holding a Bajaj Finance like stock with a weightage of say 60%, then the Bajaj Finance fell more than 65% within a matter of 1 month. So your portfolio also will drag down. So keep proper allocation, right? And secondly, yes, despite proper allocation, your portfolio may fall down. Why? More than the market. Why? Because if you are a long-term investor, you are discounting for the future years. So if you are holding, suppose if you are holding 18 stocks, then I'm very sure, and if you are a long-term investor, I'm very sure all of the 18 stocks must be for long-term, and you are expecting good performance in the coming 2 years, 3 years, or maybe 4 years, or maybe 5 years. But when the market falls, market tries to discount the latest performance, and the latest performance of your stocks may not be that good because you are betting on the future. So as it happens with us also, our basket of stocks fall normally more than the market whenever the market falls. But at the same time, it bounces back much more with much more vigor. So you need not have to fear if you have properly allocated, if you have the proper stocks. So that is on plus side as well as on the negative side. Coming to the inflation, there are a lot many people who are very much concerned about the inflation. Inflation is going up. What should we do? And stock market is the right asset to take care of your inflation concerns, because who benefits from the inflation? We all consumers are not benefited. We all consumers are the sufferers of high inflation when we buy the goods and services, when we avail the services. But it is the companies who are getting benefited. Like for high prices of steel. Why the prices of steel are high? Because of the demand. Who is giving you the demand? The public, the consumers. Because of the extra demand of the goods which are using steel as the input, there is a demand for steel, and the steel companies have raised their prices. So if you are invested in steel companies, you will also get benefited in terms of higher profitability. If your company uses iron ore from the third party, then the iron ore prices are also up. So if you're invested in iron ore company, then you get benefit. So that inflation takes into account in terms of the higher profits. So need not have to worry about the inflation. Rising interest rates. If you are invested in a good management company, then you need not have to bother about the rising interest rates, provided the company is not highly debted one, because the management will take care of the rising interest rates by increasing the product prices. So these are the 7 steps where we need to fear. It is not a step, the 7 reasons where you need to fear, but with a limited, calculated fear, rather, I should say. So when I say rising interest rate, look for how much is the debt of your company. When I say inflation, look for which companies will get benefited from inflation. So I hope you well appreciated this. Now there is a smart pause about a couple of minutes. How you can get benefited from us. Okay. So we have a lot of activities, and all these activities are listed on our website, that is smartvrc.com. And I will show you the website. Are you able to see this screen of our website? Kindly write in the chat box. Okay, thank you. So this is our website, and this is our homepage. Here you can get a glance what are our activities. Well, this is about us. Because when you are trusting an advisor, you must know who he is, what is his academic qualifications, what is his experience, and what are the fields wherein he has got an edge, how many crashes he has seen, and all those things. Coming to our products, we have 5 products. Stock advisory products, that is Smart Gains, Smart Multibagger, Smart Freedom, Smart SIP, Dr. Smart. And then we have a product comparison also. So here you have got at a glance, you can see what are our products and what are the subscription prices. These are the subscription prices, very nominal. Then we have Smart Academy. Here it is solely, this section is solely from the purpose of sharing our experience and wisdom in terms of the seminars and workshops. And also I'm an author of the book Way to Billionaire. This book is available in English as well as Gujarati language. Then we have got smart insights. Like today we are having a webinar. It is a free webinar, and we are recording this webinar, and this recording will be shared, and also this video will be put under smart insights. So this is the smart insights. Here you can select the category, what kind of videos you want to look upon, and then you can play the video. Also, you can select from here. Date-wise, they are presented here. You can select from here. Also, we have Smart Insights Pro. This is a paid version, and this is a collection of videos under 4 categories like financial freedom, portfolio management, stock research, and mastering emotions. Also, we have got a demo, and these are very, very economically priced, and this is just for gaining an expertise. And then we publish a smart report. This is not a regular product like this. The last report was published on 17th of August, and this has a stock prices between 400 to 600. Target gains are 188%, and presently the stock price is available at 5%, 4 to 5% discount from the recommended price. So the target gains from these levels are 210%. And in a day or two, we are going to remove this smart report because we are getting ready with another report. And subscription price is 1,000 rupees. You can subscribe from this page itself. So this was all about Smart Academy. Coming to the resources, we have our own investment philosophy. This plays a very crucial role in deciding your returns. What is your philosophy? So this is also a very important part. And then you can check your risk profile. Yes, we have a section on checking your risk profile. You can check your risk profile by answering very simple answers. It will take hardly a minute. And then we have a retirement calculator. How much money you will require at the time of retirement, and how much money presently you have, and how much returns you are expecting, so that you can whether meet those retirement needs or not. So we have a retirement calculator as well as investment calculator. And then we have FAQ, frequently asked questions, not only about our product and services, but also about the other areas. So this was all about our services, how you can get benefited. I hope you are able to see the screen. Please confirm in the chat box. Are you able to see the screen written as smartvrc.com? Okay, moving ahead. Now we will see the 7 reasons not to fear. So basically here the full form is a bit different. False evidence appearing real. Volatility. Volatility basically, volatility is not risk. If you are investing for long term, then volatility and risk are different things. In the short term, on day-to-day basis, the stock may be highly volatile, but not risky from the long-term perspective. So that is a very important thing. And this is a data sourced from FIFA, FIFA, During last more than 20 years, Sensex was up on daily basis by 53% and down by 47%. So as far as the risk is concerned, you will see as almost 50-50, but slightly on a positive side. So the risk is 47%, you may say, on a daily basis. On a weekly basis, risk reduces to 44%. On a monthly basis, it reduces to 39%. On a quarterly basis, it reduces to 36%. Yearly basis, it reduces to only 28%. So as you increase the investment horizon, you will find that the Sensex risk it reduces. So that is why I say in the short term, the market may look to be very risky, but in the long term, the risk reduces. Risk in a sense, the volatility. Risk is same, right? Risk for your stock is same as far as the short term is concerned or long term is concerned, but the volatility changes. Many times you will find that people are worried about the economy. Economy is not moving up and they are getting fearful. Need not have to fear because you are betting on your company. And if your company, maybe your company is exporting to other countries, so it is not much dependent on the local economy, say the Indian economy, it is possible. Or maybe it is serving a sector which has a high demand. So despite slowdown in economy, your company may continue to do well, very much possible. So, and at times, investors are also fearful about the company's performance because of the external factors. But we must appreciate that we are betting on the company's CEO, that is the chief executive officer. So he will find the ways and means to take your company out of the woods. The market, as it is happening today, people are saying that market is at 52-week high, market is at historic high, market P ratio is such and such, and previously it has happened that whenever the P ratio goes beyond this, then the market falls. But are you invested in the market? I mean to say, in the Sensex. If you are invested in the Sensex, then you need not have to worry because you are getting 14-15% returns and you are happy with that. But since you are not happy with the 14-15% returns, you are investing in individual stocks, which may not be a part of the Sensex. So you are betting on your stocks. So I am never bothered about the market. I am always bothered about the companies which I own. Yes, when you are investing in a company, you become a part owner. So I should always bother about the companies which I hold, the companies which I own, irrespective of the market. Where the market is going, don't bother. It is all short term. In the long term, it is your company's performance which will matter, 100%. And you can see this is a blue colored chart is for the smart billionaire picks. It is a part of smart gains. And the red color is BSE Sensex. During last more than 20 years, you can see how we have outperformed the BSE Sensex because we are not invested in the Sensex. We have our own stocks. Your neighbors, yeah. You are fearing that your neighbor is making money and you are left out. You are not making money. But let me tell you, more than 95% of the retail investors will exit the market in the next 6 to 7 years. Yes, that is a fact. You can inquire in your circles who are there with an experience of more than 20 years or 25 years, and you will find the percentage is very, very low. So don't bother about your neighbors and don't fear about investing at market high, as I have already given the reason in the market. As you can see, again, the same BSE Sensex chart, and about 67% of the market trades at plus minus 5% of its historic peak. Yes, as high as 67% of the time. So if you miss those 65% of the time, then your gains will be even less than the market returns. That is the Sensex returns. So don't bother about the market highs. With this, I will share one example. I recently received a phone call from Chennai, and he said that he averages at higher prices. He averages at higher prices. So his basic principle, or you can say the philosophy, is like this: the company which is going to be a star performer of tomorrow will definitely be among the top 5% high makers of today. So he's betting on those companies, on those stocks, and if those stocks are going much higher, he is ready to buy more. So there is another way. I'm not saying to follow this thing. I am strong. We have a strong proponent of our value investing. That is for intrinsic worth. You must know the worth of the stock, and then only you should average, whether it is on upside or on downside or on downside. That it all depends what is the worth of the stock and the share price comparison. Missing out, as I said, in case of your neighbors, the same holds for the market. If the market is going up, and you are left out and you feel that everyone is making money, whole market is moving up, and you have lost the opportunity. And so just because of that thought you're investing, then also it is not good. And you need not have to fear. You have to remain invested. Don't hold cash. Remain invested all the time, but in good quality stocks. So basically, you are a very small creature in the stock market. This is the whole stock market, and there are a lot many types of people here, and you are alone, and you have to face the emotions of all these investors combined. So you have to be very rational. This we have already discussed over the smart report, so I'm skipping this slide. Okay, with this we have come to the end of this presentation. This will be followed by question and answer. Before that, I want your friends also to get benefited, and so those who are willing to create wealth for the long term, in the long term, they can send request at our WhatsApp number 9755920780, and please don't forget to mention your name and city. No one can create wealth with mind full of fear. So don't be fearful all the time. Little fear is desirable. Okay, but not that all the time you are fearful. You should have a sound sleep. If you have done your homework right, then nobody can stop you from creating wealth from stock market. As I said, nothing to be feared, only to be understood. What to be understood? That you will create enormous wealth from stocks if you always keep top 16 well-diversified stories at attractive valuations in your portfolio. This is the, I can say, 100% foolproof statement. We are using this, and that is how we are outperforming the market consistently. So now we are going to start question and answer session. And you can write your questions in the chat box, or you can use the reaction button to raise your hand, and I shall unmute you and you can speak and ask your questions. Thank you very much. Any queries? I'm your subscriber for Smart Multiplier. Recently, shipping cost has gone up and is expected to stay high. Is there any stock to take advantage of this situation? So this has happened. This is a recent phenomena, and this may not continue for long, or we cannot say at this stage. It all depends how the economy moves. So shipping companies are struggling from last so many years. It would be too early to bet, but nevertheless, if you feel you can have a weightage of not more than I would suggest not more than 2% at this juncture. Can you share your portfolio returns year-wise? Okay, sure. This is the performance, year-wise performance since we started in 2001. So this is the 2002. And to start with, this is our smart billionaire picks. And this is the returns from BSE Sensex year-wise. This is the data till last year. That is 30th of May 2021. So CAGR returns 26.38 and CAGR returns of the market are 14.11. I hope you are asking for this. How to keep yourself calm in falling market like last year? Yeah, this we keep on discussing, and that is my favorite topic, how to dance with fear. And probably in the coming week, next week, I shall be giving a webinar under the banner of smart investments. And this will be exactly the topic. And I will share the link, and you can, those who are interested can join again. How to dance with fear. Sanjay Joshi sir, kindly unmute yourself.
Hi, good evening.
Good evening, sir.
Nice to hear a very good presentation.
Thank you.
My question is a little different. New unicorns, loss-making unicorns are coming in for IPOs.
Yes, sir.
Or stretch valuation. Will there be any advice from your side to our group?
Yeah. There was a time when Amazon was making huge losses, and people were not sure how it will make profits. And with the first business model, it was not possible to make profits. But over the years, it diversified and it came out with new ways to create profits, and it took a long time. But definitely those who waited for such a long time, they got benefited tremendously. But really, it is very difficult to find out at early stages as how the company will turn profitable. If you are selling something at a discount available in the market, it is really very difficult to make profits because you have got more expenses also. Means apart from the discount you are providing, there are other expenses also, associated expenses. So you need to discover some new models, or you need to use the data from this venture to the new venture. then only you can create profits. And in early stages, it is as it happens, those investors who invest in startups, the success ratio is, I believe, only 2% or 3%. And so that would be the case if you invest in such companies at early stages. So be prepared for heavy losses. If you are rather I should not say heavy losses, but be prepared for high level of risk in such companies. And rather, I would like to recommend that if at all you are investing in such companies, then don't put more than a percent of weightage, because if you succeed, then your money will multiply by maybe by 50 times or 100 times in times to come, and 1%, even 1% weightage would be sufficient. But if you lose, you will lose only 1%. That is what I can suggest. But you have got a more experience than me, and you can also share your views.
Interesting. This is very interesting analysis. Thank you. Thank you, AK. Thank you.
Thank you, sir. Thank you.
Thank you.
कुमुद गिरी,
आ रही है आवाज?
यस आ रही है, बताइए।
ये वालचंद नगर इंडस्ट्री के बारे में आपने बताया मेरे को।
जी
तो इको आ रहा है। तो इसमें उस समय आपने मेरे को सजेस्ट किया था, काफी सब्सक्राइबर आपको तो मालूम ही है, उस समय मेरे ख्याल से 900 रुपए के आसपास मैंने लिया था, और करीब 2100 रुपए गया था, ये 2100-2200 रुपए तक गया था। एंड आई हैव टू मच बट रिकवर्ड ऑल माय लॉसेस।
ओके।
मैं यही बताने आया था सब्सक्राइबर अपने सब पार्टिसिपेंट को, अपने सब साथियों को,
जी
कि लॉन्ग टर्म में तो मेरे को बहुत बेनिफिट दिया अनिल असनानी जी ने। ही इज माय बेस्ट फ्रेंड आल्सो। और एक समय पे मैं काफी नीचे डूब गया था, मतलब शेयर मार्केट में काफी डूब गया था, तो मैंने इनकी हेल्प ली उस वक्त। और इस समय उन्होंने मेरे को मात्र 25,000 इन्वेस्टमेंट, मेरा बचा ही 25,000 था, तो वहां से इन्वेस्टमेंट करवाया और ऐसी कंपनियां दिलवाई मेरे को। तो मैं उसके बाद जो है राइज करना शुरू हुआ।
आपकी आवाज बंद हो गई है। ओके, थैंक यू फॉर sharing your experience, Kumud. Thank you. So many people asking from outside of India regarding investment in crypto. We don't advise to invest in crypto because crypto in itself is not doing anything which yields the results. So we are investing in companies because they are doing something useful for the society, for the profitability. When you are investing in the stocks, you are investing in a company, and behind the company there are people who are working, who are producing goods and services, and they are doing something good for the society, good for the shareholders. And nothing like that in case of crypto. Crypto is simply a demand supply game. How can we determine the exit level in a particular stock rising 200 to 300 points? Sir, everything is on the worth of the stock. It is not 200 or 300%. It is quite possible that the stock is up by 500% and still it is worthy of investment. And we have recommended such stocks also, but not necessarily. So it all depends how correctly one is able to find the worth of the stock. That is the ultimate thing, finding the worth of the stock. Mr. Nand Kumar.
सर गुड इवनिंग।
गुड इवनिंग सर।
सर बढ़िया था हमेशा के जैसा।
थैंक यू।
सेमिनार मेरा एक क्वेश्चन ये था सर, अगर 20 साल का होराइजन है तो ये स्मार्ट बिलियनियर जो आपका पोर्टफोलियो है और स्मार्ट मल्टीबैगर, तो दोनों में से कौन से प्रोडक्ट को सर बेस्ट जाना चाहिए?
दोनों अलग टाइप के प्रोडक्ट्स हैं। As far as the smart billionaire is concerned, it is a total hand holding, क्योंकि आपको सब कुछ रेडीमेड है. लेकिन स्मार्ट मल्टीबैगर में you have to build your own basket, and in a year we advise about 12 to 15 stocks. So 3 साल में आपके पास हो सकता है कि 30-35 स्टॉक हो जाएंगे, and then you have to maintain the balance also. Balance, I mean to say proper weightage like that. As far as the returns are concerned, probably multi-bagger will provide you more returns, but at the same time you need to provide the proper weightage. मैं आपको एक एग्जांपल देता हूँ. मान लीजिए कि मैंने कोई स्टॉक एडवाइस किया, उसका वेटेज मैंने आपको बोला कि आप 4% रखिए पोर्टफोलियो में, और 1 साल के बाद हो सकता है कि वो डबल हो गया. टारगेट अचीव नहीं हुआ है लेकिन डबल हो गया, तो उसका वेटेज बढ़ के 4% से बढ़ के 7% हो गया. नाउ यू हैव टू अगेन रीअलाइन. आपको ये रीअलाइनमेंट करते रहना पड़ेगा. सो दैट इज ऑन योर पार्ट. तो ये आपके ऊपर डिपेंड करता है. आप अगर ज्यादा रिटर्न चाहते हैं तो फिर थोड़ा सा आपको होमवर्क अपने एंड पे करना पड़ेगा. Otherwise, both my products are very good. Excellent.
Okay, sir. Okay. Thank you.
Thank you. What is your advice on electric vehicles sector given government emphasis on reducing oil imports by 2025? Electric vehicles may take time. It is too early to, especially in India, it may take some time. By 2025, electric vehicles may not make a much dent in the total present market share, maybe hardly about 5%. But definitely there are companies which are serving the electric vehicle market at the international level. And there are a couple of very good companies available at attractive valuations. And one of those companies we have covered under Smart Report, recently launched Smart Report. Your view on Maruti and TVS? Maruti and TVS are very established, well-established companies and good from medium to long-term perspective. But I don't think they can give you the returns better than the broader indices. So you need to find some better stocks. Traditionally, auto companies, their growth rates are about 10 to 12% yearly. So with this, we have come to the end of today's presentation. Thank you once again for sparing your time with me, and thanks for asking such intelligent questions. This helps us also. This is truly a knowledge sharing session. We also gain and you also gain. That is a win-win situation. Thank you.